Bloomberg Audio Studios. Podcasts, radio, news. This is the business of sports.
The business of sports can be intimidating or hard for a startup to break into.
We really appreciate when our owners are actually there, with us through the journey.
Teams, ours especially, have been very intentional to diversify at all levels of the company.
I think we're in the golden years for the NFL and college football.
Our demographic reach has continued to expand.
This is going to be really unlocking the streaming platform for sports fans.
Sports valuations are rising. We'll see when they peak.
You don't have to be the best in your sport to make a whole ton of money.
Bloomberg Business of Sports from Bloomberg Radio.
This is the Bloomberg Business of Sports, where we explore the big money issues of the world of sports. I'm Michael Barr, along with my colleagues Damian Sassower and Vanessa Perdomo. Scarlett Fu will join us later in the show. Coming up, we talk college basketball. March Madness is here, and we'll talk with BetMGM CEO Adam Greenblatt about some of the biggest betting trends for the tournament this year.
We've seen a 30% year-on-year increase in bets on women's college basketball. And this is going to blow your mind. Over the past 2 years, we've experienced more than 750% increase in bets on the women's college game.
We'll also talk the latest in a legal battle between the NCAA and former players. A crucial court date is set for early April, and that could pay out nearly $3 billion in damages to former athletes and build out plans for future compensation for college players. All of that and more is straight ahead on the Bloomberg Business of Sports. But first, the Boston Celtics, they have a new owner. A group of buyers, including STG Partners co-founder Bill Chisholm, reached a deal late this week to buy the NBA's Boston Celtics in a deal totaling just over $6 billion. Here now to take us through what we know about the deal and what could be next is Bloomberg News sports business reporter Randall Williams. Randall, welcome to the Bloomberg Business of Sports.
Thank you for having me.
Gee, something happened with the Boston Celtics. Looks like they're sold.
$6.1 billion to Bill Chisholm.
Now, that's more than Josh Howard's paid for the Commanders, right?
Yeah,
so does that make it the most?
Yes, the most expensive sports deal ever.
Wow.
Which people were wondering if this would happen, if they would surpass that $6 billion mark. They barely got over it.
Wow, that's awesome. I mean, so $6.1 billion. Yeah, I mean, Wick Grossbeck's got to be doing cartwheels in his living room right about now, wouldn't you say?
Yeah, I think so. I mean, the Celtics don't own their stadium, and that was a big caveat to this deal because, this is setting the table for NBA expansion. And if you're an expansion bidder and you're watching this, you don't want to pay more than the Celtics, obviously, because the Celtics are one of the oldest franchises. They don't own their stadium, and so when you're looking at this, it's like, okay, let's set the mark and let's see what we don't want to pay. And this doesn't include a stadium, so $6 billion without a stadium is a lot of money. You think about Vegas. Vegas is a big market. You think about Seattle. Seattle already has their stadium built, so I don't think Seattle will surpass this, but who knows? Who knows what the price could go up to? I think Vegas very well could, depending on who's buying.
But they would get it as an expansion fee? As that high of an expansion fee?
I don't think so. The expansion fee bankers and people around have told me that they expect it to be between $4 and $5 billion. Now, if without a stadium, $4 and $5 billion, so just a fee straight up paid out to the NBA owners. But with a stadium, if you don't have a stadium, then you have to build one. That could be anywhere from $1.5 billion to $2.5 billion more. You add that on top of the $4 to $5 billion, and that's anywhere from $5.5 to $7.5. I don't think that an NBA expansion team is going to sell for $7.5 billion, but there are some pretty prideful people out there, pretty prideful billionaires out there who want into this NBA business, and who knows what's going to happen.
Is that what we saw with this? Yeah. Was that he was just more willing to spend the money than anyone else, or why did they get chosen?
Still be determined. I mean, I think Bill had a good group, and when you have a private equity firm that comes with $1 billion, that helps out tremendously. I don't know the specific details of what the other bidders had, but they had the best deal, and the Boston basketball partners will be moving out at the end of 2028.
So let's dial it back here. I mean, Wick Grossbeck bought the team in 2002 for $360 million. $6.1 billion. I mean, Michael Barr, that's 17x. in 23 years. And right now, you caught me because I'm looking up NVIDIA stock, right? And I'm trying to figure out when you had to buy NVIDIA to get a 17 times return. I mean, like, how many assets out there? And by the way, we're not talking about $1. I mean, you have to invest 360 to get 17x on that number is just frighteningly.
And
awesome.
you have to think about like Steve Pagliuca, who's also an owner. He owns a 20% stake, and he was bidding for this as well. So like, he's technically not a loser when you think about him owning 20% and his team being sold. Like, the other groups out there, I think are, you could argue are bigger losers. But for Steve, who is a big Celtics fan, it's not the worst thing in the world. You already own a piece of the team. You're being paid out even more than, what he got in the first place. So there's no losers in this deal except for the people who aren't owning the team.
Well, now the Grosbeck family, they wanted it, and I'm going to go back to what you were saying earlier, in 2 phases.
Exactly.
So can you explain that?
So they said that they were going to sell this in 2 phases, 51% and 49%, with this first piece being sold now. Bill Chisholm, he's going to purchase the rest of the team at a later date. So he's going to be the outright owner of this team, he and his ownership group.
So I'm looking at the chart here on NVIDIA stock. If you bought NVIDIA at the depths of the coronavirus, the COVID crisis, right? I'm talking March 2020, you could have got it at $7 a share. It's trading at $120. So, okay, it's been done before. I'm just, let everybody know here. I mean, we could have bought NVIDIA in 2020 wouldn't be here right now. Michael Barr, you and I'd be on the beach.
How can I can't do that. Why can't I do that? Why Randall, why can't I?
You can.
Vanessa, why can't I do this?
Technically you can. You just have to choose a smaller league. So whether you want to get into the NWSL, the WNBA, there are other sports investments out there for us everyday people. It's just about being able to raise the funds. Can you, Michael Barr, raise $250 million? It's not $6.5 billion. It's a smaller number, but that might get you a WNBA team. It might get you an NWSL team, but $250 million isn't even going to get you 2% of an NFL team.
Oh man, that's it. It shows you now you need private equity to do these deals.
Exactly.
Today.
You're going to see more of that in the future.
Can the Celtics as a team, and I agree with what you're saying earlier, 6.1, that's only going to be out there for so long because somebody's going to come along, maybe because this is any team now, any pro team, and one day come along and they say, hey, Jerry Jones, listen.
You're talking to Jerry Jones. I don't know about that, but keep going.
If the price is right, why not?
I think it does. There will be a team that eventually surpasses us. Now, the team to do it will have to be a iconic franchise or one that's in a big market.
I mean, right. I mean, Ishba only paid what for the Suns? I mean, that's not
$4 billion.
Yeah, you can't compare that.
Exactly. Now, if I had to guess, it's easy to say for the MLB to surpass this, it would have to be another one of their iconic franchises. Yeah. For the NFL, I think it's the next one.
I was just going to ask that. For the NFL, it has to be just the next one, and it'll keep growing on. So, right. Because, in this idea of the NFL revenue, no one can come close to it. That's why this was almost surprising. Or was it just because it was a storied franchise?
It's both. I think it's surprising that they got just a tad bit over. But for the NFL, I mean, you have to think about the last couple purchases from the NFL. When the Panthers were sold, I believe that was around 2.2. Then you had the Broncos, which is 4.6. And then you have the Commanders at $6 billion. Who knows what the next one could sell at? But if the Celtics are just surpassed that by $50 million to get to 6.1.
And they're the champs. They're the defending champs.
And they're the defending champs.
And they got
have
their
a crazy
best players
payroll.
locked up and they're young. Yeah, I mean, so I agree with you.
Exactly. So, you look at some of these succession plans that are out there. We know that the Seahawks have to be sold. We know that the Saints have to be sold. There's going to be somebody out there who's looking at the NFL's business and is like, these teams don't lose money. I am going to control my stadium. I'm going to make a whole lot more cash even after investing this money. I think it's inevitably going to be passed, and my bet would be on an NFL franchise at some point.
Well, Randall, I got to ask you, I mean, the Lakers look good, man. Talk to us a little bit about, after this trade, what do the Lakers look like to you, right? Are they a real contender? But more importantly, where does this leave Dallas? I mean, my God.
I've never seen I've never seen a franchise torn apart in a year the way that I have seen this franchise. I mean, Dallas lost the finals. Luka goes out with an injury. You trade him in the darkness of the night, and then Kyrie gets hurt. Anthony Davis gets hurt. And I mean, I'm naming the top players. There are other players who have also been hurt. In regards to the Lakers can contend. It has drastically. They got Luka Doncic for Anthony Davis and a couple other pieces, but they didn't lose their soul when they traded for him, which if you're trading for Luka Doncic, you're expected to lose your soul. And so with that in mind, you think about how much that supercharges the NBA as a league with LeBron and Luka playing together.
Here come the Lakers into the front court with the ball and a 1-point lead. Reeves, top of the key. Goes to Luka, right side. Doncic dribbling one-on-one against Walker Kessler. Three-pointer over Kessler. It's good! Luka's first three is a Laker, and the place goes nuts. LeBron with Marcus Smart on it. LeBron dribbles right. LeBron down the middle. They forgot to stop the ball. Slam dunk by LeBron.
What does it look like? Think about these matchups for the Lakers. If they play the Celtics, you have the oldest rivalry in basketball going at it again.
Jaylen Brown against Luka Doncic. He's thinking about pulling up for the three instead. Couple of dribbles. Shot clock down to 6. Jaylen backs it out. He's near half court. Jaylen pull up on Luka. Straightaway three. Got it.
If they play the Cavs, it's LeBron returning to Cleveland. Like, there's a lot of different stories. And granted, even in the matchup
they
before that,
got to get through OKC. I mean, they're the only.
We're not worried about OKC. Golden State. Like, you think about the Western Conference Finals. Now you have LeBron versus Steph.
Butler, right wing, gets it to Curry. Curls, fires a three, knocks it down. And he's now got 25,000 points plus in his career. The 26th player in NBA history to reach that plateau.
Yeah. Again, so there's a lot out there.
See, and you're right, because the L.A. against Boston, and, old man Barr is going to talk again. The 1970, back in the NBA game of the week when
Dinosaur
it used to be
days.
on ABC. Yeah, we had color back then and TV antennas.
Well, Michael, did you see where Randall just went there? He went right to the playoffs. And, we're talking about a $6.1 billion valuation to take it back to the Celtics. It's all about getting to the playoffs and getting and more playoff games, more home playoff games. And now aren't the Lakers the 2 seeds? So LA's got it's showtime.
They're around there. I mean, so much of this is fluctuating because I think the seeds between 3 and 8 are just so close to one another. Mm-hmm. But if LeBron and Luka are playing and they don't make at least the Western Conference Finals, it would be a tremendous disappointment.
Oh, wow. Yeah.
Keep your eye, by the way, on the Cleveland Cavaliers.
They're the real deal. They're the real deal. They don't get talked about enough because LeBron's not there anymore, but they're a serious threat.
Spider.
Mitchell, crossover, 3-ball. Bang! A 50! A 50-piece here in the first quarter for the Cavaliers.
Randall Williams, my man, thank you again for joining us on the Bloomberg Business of Sports. Always a pleasure. Always dropping knowledge on us. Thank you again, sir.
Thank you for having me, as always.
Up next, we dive in on March Madness for my colleagues Damian Sassower and Vanessa Perdomo. I'm Michael Barr. You're listening to the Bloomberg Business of Sports from Bloomberg Radio around the world.
This is Bloomberg Business of Sports from Bloomberg Radio.
This is the Bloomberg Business of Sports, where we explore the big money issues in the world of sports. I'm Michael Barr, along with my colleagues Scarlett Fu and Damian Sassower. The NCAA tournament is here. But before we go all in on March Madness, we want to touch on another big story in college sports, which could have a huge impact. The NCAA is expected to approve a settlement that would pay out nearly $3 billion in damages to former athletes and establish a framework for player compensation. Bloomberg News Global Business of Sports reporter Ira Boudway has done a lot of reporting on this, and he is here now to take us through the latest. Ira, welcome back to the Bloomberg Business of Sports.
How's it going?
The flawed plan to gain control of college athletes' pay. Now, as my father would say, how in the hell are you going to do that?
It's interesting. I mean, I think people who follow college sports are aware of this settlement and the class action suit that were brought by former athletes over the fact that they weren't allowed to earn money off the field for years and years. And then the NCAA changed that rule back in 2021. And now we all know this term NIL, name, image, likeness deals. And that class action suit is supposed to be finalized in April, actually the same day as the men's NCAA basketball championship final. And it has in it these provisions, right, that schools will now be able to pay players directly up to 22% of their athletic revenue. And everyone's sort of focused on that, this pay and this cap that are included in there. But there's also a provision in there that says that outside deals, third-party deals for NIL, which basically are what now drive the market, what athletes are getting millions of dollars for, are going to be subject to a fair market review by this outside entity that's going to be run by Deloitte. Basically, what they're trying to do is ensure that NIL deals are no longer used as pay-to-play, which is what's happening now. NIL is supposed to be like, I lend my name to your advertising campaign, you give me some money for that. But what it's become is, I come to your school and play quarterback and you give me some money for that, right? And they want that to end. They want the pay to be capped and to come through the schools and to be under their control and for them to have full visibility into the marketplace. But I think it's going to be really hard to enforce.
Yeah, how do you do that? I mean, how do you wrangle all this together? This all kind of developed organically, and there's no real regulatory body overseeing any of this.
Yeah, it's very tricky. I mean, this world exists in pro sports. So athletes who do endorsement deals in professional sports are bound by rules in their collective bargaining agreements that basically say the owner can't come and make a deal with you on the side with his other company or whatever it may be and pay you basically salary off the books. And teams have tried to break these rules. So there are these fair market reviews. They exist in sports, but they usually are part of a collective bargaining agreement, right? And that's how this works normally. But college obviously is a special case. There is no CBA. There doesn't seem to be any movement toward one. It would require all this work about declaring athletes employees, forming unions or some kind of representation. And so they're trying to figure out a way to do this through this settlement and through this Deloitte clearinghouse, which is basically going to say if you have a deal of more than $600, you have to bring it to the clearinghouse. And the clearinghouse is going to look at the deal and they're going to say, is this deal with somebody who we call basically a booster? Like somebody who wants the school you're going to win. Like Phil Knight, very famously, the co-founder of Nike, supports the Oregon Ducks, University of Oregon. He gives lots of money to their athletes in NIL deals. He would be one of these people on the list, right? Who he's giving this money because he wants Oregon to win, not because he's trying to promote his new company. And so if you're on that list, then Deloitte is going to take that deal and say, is this what people are paying for the work you say you're going to do for the name, image, and likeness of a person like you who is a sophomore and plays in this position in this market with this many social media followers? Is this the right amount of money? Or is this actually just the money that they're trying to pay you to come play for their school? If they think it's too much, they're going to throw it out. And then the athlete will either have to appeal that to an arbitrator or renegotiate or just abandon it.
Those Deloitte guys will be really popular.
Well, yeah, so that's one issue, right? Their authority is going to get tested in court and otherwise. And then they also then have to have this separate to the Deloitte clearinghouse, this enforcement entity that they're going to build, assuming this gets finalized. This gets finalized in April. This would all go into effect in July. So they've got a little bit of time to build it, but it's a real challenge because then they have to have a group of people who basically figure out if you have unreported deals, right? A lot of times these deals at this point, athletes are supposed to disclose their NIL deals to their schools. A lot of them do not. And so you're going to be back in the same situation that they've been in for a long time, which is athlete rolls up to school in a luxury car. You don't know where that money came from. It doesn't seem to make sense. You have to open some kind of investigation. Or, guy at Alabama tells on guy at Clemson because he wants to get Clemson in trouble, and he knows that guy at Clemson made a deal without disclosing, and now you got to chase down that tip. Or guy makes a deal with a car dealership in town, who's a booster for Kentucky, let's say, and the deal is we'll give you $100,000, but you got to show up to 20 events that we're going to hold during the course of the next year. Deloitte looks at that, says, all right, I think that passes muster. That's within the range of the reasonable. But guy no-shows, right? Goes to one event, skips the other 19. You got to follow up on all of that. So I think it's going to be a real trick.
By the way, in case anybody not familiar with the settlement part, the NCAA, if approved, would pay $2.8 billion in damages to former athletes and establish a framework for schools to compensate current players. Now, which brings me to the next question. The NCAA has just finally said, you know what? the heck with it. There's nothing we can do. Yes, the amateurism stuff, okay, it's over. All right, fine. Now you got to clean this stuff up. I guess the first step is taking the third party out of it.
That's kind of the goal here. I mean, I think what they want to do is have these boosters give that money to the athletic department, donate it, and we will use it as part of our revenue because we're allowed to now pay 22% of our revenue to players. So that'll boost our the overall average that these schools are getting, right? It's pegged to an average. Give us the money and we'll pay. So this coming season, theoretically, the schools are going to have about $21 million in the schools that are part of this settlement to pay players directly. And so they want to say, look, that's the money. That money we don't have to put into any kind of fair market value assessment. We can just give as much as we want as we see fit, and we will spread it out among different programs, different athletes, and we'll figure it out, right? It's basically like we're going to have payroll and salary cap management and GMs who are going to have to do that job, but don't go outside of that because the main thing they're worried about is competitive balance. When Phil Knight is willing to spend as much as he's willing to spend to support the University of Oregon, that's a problem for a school that doesn't have a billionaire patron, right? And so they're trying to make it a relatively level playing field, which is the whole point of salary caps and salary structures in professional sports in general. But again, those are all part of collective bargaining agreements, which gives them legal standing. And I think this, basically the argument is this is antitrust, right? Behavior. Like you're being a monopolist if you tell people they can't sign a deal. Like how does the NCAA have the authority to tell two parties that they can't make a deal for as much money as they feel like? The answer is, in the case of the professional leagues, well, we have a collectively bargained agreement, so everyone's signed onto it, and collectively bargained agreements generally have an antitrust exemption, so we're allowed to restrain these kind of behavior. NCAA is hoping that they can use a class action settlement to accomplish the same thing, but there really is no real precedent for that.
Do you feel like, from where you sit, that CBAs are inevitable in college sports?
I mean, it's interesting. I don't know where you go from here because getting to CBAs is its own challenge, and they've spent so long resisting that, right? And there is no current framework really for it. And you've got the problem of like the rules for public schools would be different than the rules for private schools. At what level would players be represented? Who would be representing them at the table, and who would they be negotiating with? None of these questions are answered. However, the CBA as a structure is obviously the solution to all of these problems, right? It's a solved problem. How do you pay athletes in an equitable way that is legal and that allows for competitive balance between teams? You do a collectively bargained agreement.
The transparency is all spelled out.
It's all there, and we know how it works. It's a solved problem. Baseball did it decades ago. Other leagues have adopted it. Works. But how you port that to college sports is no one's figured out yet.
I think a lot of people, a lot of college athletes are forgetting, and you brought it up, about name, image, and likeness. Well, you got to build a name first to cash in on that, which means you got to play the doggone game. And if you don't play the game, you don't build a name. Hey, that rhymed. That was good. Which came first, the chicken or the egg? Is like, hey, guys, you want to build the name? Caitlin Clark's a classic example. She built the name on the court. And now she made a boatload of money from endorsements. And I guess I'm trying to pass that on. Maybe that's something that needs to be schooled into a lot of the college athletes.
You got to put the horse before the cart?
Exactly. Yeah, exactly.
Yeah, I think that's true. I think the counter argument is like, look, leagues and conferences and schools are making a lot of cash off of our work, right? People are tuning in to watch us play. And so we should get a piece of that, right? And that's what this revenue sharing part of the agreement is really about, right? But what is that money for? It's for the performance on the field and on the court. And no one can quite admit that because that means you're an employee, right? And so they've tried every other way. NIL.
Saying that out loud would just change the game completely.
Even in this settlement, they're not exactly saying schools are going to pay directly to players is for their play. They're basically saying it's revenue sharing money and it's still NIL because the players will be giving over some of their name, image, and likeness rights to the schools. They don't want to open that kettle of fish, but it's like it's open.
Right. So, in practice, it's there.
And everyone knows what this is about.
Well, yeah. I mean, it's like, think about it. Before all of this came about, and I'm going to openly admit, before all of this happened with the can of worms of NIL, I was like, that's right, college athletes. You make that money. You get what you can. And then somebody didn't think it through. And this is what we got. I mean, think about it. Schools used to make money off of the athletes' jerseys. And, and of course, the college athlete is like got a free lunch, and that was about it, in terms in the cafeteria.
No, he got the degree. Remember? Right. That was
scholarship.
Yes. Yeah. Okay, yes, very much so. And by the way, you can't go to class because you got to be out on the football field.
Well, that's a separate story.
Yeah. Ira, if we all just had a beer, we could settle this all out. Right. Ira Boudway, our very own Bloomberg, a great article, folks, the flawed plan to gain control of college athletes' pay. Thank you again, my man.
Thank you.
Up next, we stick with college basketball and bring in BetMGM CEO Adam Greenblatt to talk about some of the latest betting trends for the NCAA tournament this year. For my colleagues Scarlett Fu and Damian Sassower, I'm Michael Barr. You're listening to the Bloomberg Business of Sports from Bloomberg Radio around the world.
This is Bloomberg Business of Sports from Bloomberg Radio.
Thanks for joining us on the Bloomberg Business of Sports, where we explore the big money issues in the world of sports. I'm Michael Barr, along with my colleagues Damian Sassower and Vanessa Perdomo. The NCAA basketball tournament is underway, and that means it is a big time for sports bettors. MGM is all ready for March Madness, and this year it's trying out something new, including a free-to-play game. Here now to talk to us about the sports betting landscape for March Madness this year and more is BetMGM CEO Adam Greenblatt. Adam, welcome to the Bloomberg Business of Sports.
Well, thank you for having me. It's always great to be back.
I was just talking about this just before you hopped on the line, that I was going to make an individual bet I know brackets are big, but I'm looking at the individual games in making the bets, which where do you make more money? From individual bets in this time of the year, or people just trying to do their bracketology?
First thing to say is we have something for everybody. We've got free-to-play games, we've got bracket challenges, we've got singles bets. You can parlay up things across games. You can put things together in the same game. You can bet on individual players. You can even bet whether teams are going to score in the first minute, or even how many dunks they're going to be in a game. So there really is something for everyone, and it's an exciting time of the year for us.
Adam, it's interesting because the Super Bowl is obviously the biggest concentrated, betting day of the year, but due to sheer volume of the games, of, the fact that there's a men's and women's tournament going on at the same exact time, does this come close to the Super Bowl, or is it the second biggest betting, market of the year?
It's an incredibly important time of the year for the industry. And as you rightly call out, where the Super Bowl is the biggest individual event, the American Gaming Association has just come out and said that Americans will legally wager $3.1 billion on the men's and women's college tournaments, and that's up from $2.7 billion last year. So we expect this to be the most bet tournament in BetMGM's history. And it's just that there are so many games, as the men's and women's tournament and the women's tournament this year, and frankly, since last year actually, is really gaining momentum, gaining steam, and is a meaningful contributor to participation and bet volume. And in fact, there are just so many good storylines to follow. Yep. Mm-hmm. Player level storylines, team level storylines. We've got some, history with St. Peter's a couple of years ago and North Carolina. What we see differently in this tournament from frankly the regular season and any other event is the public being captivated by those Cinderella stories and really investing behind them.
Adam, I'd like to know from your perspective, we've seen continued growth in the women's game, but are we seeing that growth translate into the amount of money wagered on the women's game? I know you're teaming up with The Gist. Tell us a little bit about what you're doing this year that's different than last.
Last year was really the breakout year for the women's game, and that was really driven by how Caitlin Clark captured the imagination of the public and the betting public. But that story isn't over, and what we're excited to see is a new slate of stars like Juju Watkins, Paige Beckers, and they've really continued to captivate. So this year we've seen a 30% year-on-year increase in bets on women's college basketball, and this is going to blow your mind. Over the past 2 years, we've experienced more than 750% increase in bets on the women's college game. And, I think that's probably our highest growth in that period of any sport. And so as a business, you look at where your growth is and you invest behind it. So this year, we're going to offer more markets than ever before for the women's tournament. We're expanding our player props, so bettors are able to bet on the performances of individual players. And we're expanding that player prop offering to more players, because what we're seeing is there is more players have resonance with the betting public. And we're also offering things like halftime markets in earlier rounds this year. And you name check the Gist as well. We're really excited about this, our partnership, which is a new one with the Gist. It's a women's led sports media brand. And we've partnered for the Gist to provide social media content during the women's tournament. And one data point, why did we choose the Gist? 71%, now this is the overlap between the general interest and betting interest, 71% of the Gist's readership has expressed interest in sports betting. Another interesting point, so we've seen tremendous interest in the college game during the regular season. And one of the themes this year versus last is the growth in the same game parlay adoption. So players have really embraced the ability to bet a few things in the same game. That, from BetMGM's perspective, has doubled year on year. Now, your question was about, do we see something different during the tournament than the regular season? And the answer is we do. And the tournament attracts the widest possible audience in following obviously the college game, and with a wider audience that introduces more recreational, we call them recreational bettors, less frequent bettors, to enjoy the enthusiasm and the excitement of the tournament. Now, less regular bettors are less familiar with the product, and the so what of that is, we see about a 20% increase in the proportion of pre-game bets, so non-live bets. Players who are less familiar with the product will come and go, oh, the game's going to start, I must get my bet on. And those bettors will be less familiar with the fact that, oh, when the game's on, there's a myriad of things that I can bet on as well. So that's the key point. 20% more pre-game betting, because the audience is much, much wider. We have higher concentration of less regular bettors.
But Adam, in all seriousness, I mean, the tournament, it's a special time of season for you, obviously. But, I joke because you and I talk about, South Africa, it's not rugby season, but talk to me a little bit about international sports. Talk to us about, Premier League, talk to us about soccer. I mean, globally speaking, sports gambling has obviously been, Europe and the rest of the world was before the U.S. But, what does the world look like to you now? And what does the world look like to BetMGM?
First point to make is that BetMGM, the joint venture between MGM Resorts and Entain, my two shareholders, the joint venture's sole focus, my sole focus, and our business's sole focus is in North America. So we are a leading operator in North America, which includes all of our North American regulated states, US regulated states, plus Ontario. We are the number one by market share operator in Ontario, and we're looking forward to the province of Alberta regulating online sports betting and iGaming, probably the beginning of 2026. More broadly, however, international sports, we're seeing strong and increasing interest in what the Europeans call football, what we call soccer. And, as we look to next year, where we'll be hosting, in the US, we'll be hosting the Soccer World Cup, the Football World Cup. We are anticipating that being a catalyst for soccer really taking off as one of the bread and butter betting sports in the US. At the moment, of course, it's, we've got the big three by volume. We've got football, basketball, and baseball, with hockey somewhat of a distant fourth. Alongside, it's hockey, tennis, soccer. I think post the World Cup next year, we're going to see much deeper penetration of soccer as a betting sport, which it is frankly everywhere apart from the US. Soccer is the number one bet sport outside the US by some margin. And I expect that we will see accelerated growth come next year's World Cup.
I know we're running out of time, but since you brought up Ontario and you're in a very strong market there, the tariffs are not really affecting you, are they, of what's going on? Because yes, it's a physical product, but it's not. You're not bringing steel or aluminum or anything like that. What has there been any impact from the tariffs for you guys?
So we haven't seen direct impact from the tariffs. From a U.S. perspective, we have, of course, seen a decline in the exchange rate. The U.S. dollars is BetMGM's reporting currency. So obviously, as the Canadian dollar loses value, the value of our in U.S. terms, the value of our Canadian earnings it just converts at a lower rate. So that would be the most direct impact we are seeing. But stepping back from a more macro perspective, we're not really seeing any indication of a slowdown. Our bettors are turning up as frequently as they have in the past. Bet count, how many bets our players are making, it remains strong, and the value per bet remains in line. So we're not really seeing any impact of either the tariffs or macro slowdown in the US or Canadian economies.
Adam, we're bettors. We're a diehard bunch. We'll come. We'll come and we'll bet it. Adam Greenblatt, thank you, sir, for joining us on the Bloomberg Business of Sports.
Thank you for having me.
Our thanks to BetMGM CEO Adam Greenblatt for joining us. And thank you for my colleagues Damian Sassower, Vanessa Perdomo, and Scarlett Fu. I'm Michael Barr. Tune in again next week for the latest on the stories moving big money in the world of sports. You're listening to the Bloomberg Business of Sports from Bloomberg Radio around the world.